Welcome back to America's Retirement Headquarters. It is the home of the Retirement Guys formula, America's Medicare Associates, and Retirement Tax Partners with Nolan Baker. 419-794-3030 is the phone number. The website, find out more about the team. Set up a time to speak with them. That is arhq.com. Don't forget, if you missed the first half of the show, previous editions of America's Retirement Headquarters, and you want to catch up, available on demand, YouTube, Apple Podcasts, Spotify, wherever you consume your digital media. Just search for America's Retirement Headquarters. It is all there for you to check out. I think it's no secret that the stock market is having a hard time digesting the latest round of Trump tariffs. Citi's Kate Moore tells CNBC that this is no time to add risk to your portfolio.
If you have a portfolio that is fully invested, we're going to sit tight and think about being a medium and long-term investor. But if you have cash that you were looking to deploy, the uncertainty factor, whether it's in bonds or in equities, was too great for us to have a really convicted call. Like, money is made while you're being patient. We want to be thoughtful about when we re-enter the market or we think about adding to risk. But I would also note the uncertainty factor is just starting.
I can't help but feel like she's kind of dancing around the subject of timing the market. Nolan, what are your thoughts on that?
Yeah, I mean, she really is talking about that and talking about, fully invested in what to do. I think really now is a crucial time to be taking a look at your investments to find out where there are opportunities and where to avoid some of the threats that are out there. More important than ever to know what you own. As you talk about, on our YouTube channel, we've been giving out advice about this. And for those of you that are terrified of market crashes, here's what to do. So if you go back and you look at time, and you can think of, COVID, or you can think of 2008. Heck, you can go back to 2000. If you made a change to your investment plan during that environment, and that was kind of a costly mistake, we want to try to help get you through this environment, to get you out of the panic mode, to get you into finding where you can feel very comfortable with your investment plan, to not only survive, but ultimately thrive, because it's going to create some tremendous opportunities that are out there. And, when we look at this, the first thing I want to do is work with you on running the fire safety drill versus responding after the fact. So there's so many investors that don't do anything until they feel like they have to kind of abandon ship or change course. And the problem is that when we think about the stock market, you or I have little to no control over what the stock market does. I could wake up in the morning, I could go on to the news, and I could find an article that talks about, now's going to be the best day to get back into the market. And, by lunchtime, I could read another article that says doom and gloom is immediately coming and, where to get out. So you feel like you lost control, and I get it. And wanting to have financial security at retirement time is dramatically important. So making a change to your portfolio, people do that because they feel like they're making a decision and that gives them a little bit of control back. But I don't want you to make a decision to make a change that could be costly. Give you a perfect example. I had a lady who had recently come into our office, had gone through a divorce, and she's a hardworking small business owner. And unfortunately, during COVID, she got so panicked about what was happening, she moved the overwhelming majority of her money over into fixed income. And what happened was, we now know, looking back, even despite the recent volatility or the sell-off or crash or whatever you want to call it on Wall Street, she's missed out on all that opportunity because she was sitting in fixed income. And now she has this real big dilemma as far as figuring out, well, do I get back in now or do I wait? So timing the market as far as getting all the way in or out is, number one, very difficult. On a previous segment, we talked about the ability to have a gas pedal on the portfolio to be a little bit more adaptive to market conditions. Gas pedal or cruise control is the title of that on our YouTube channel. You can check that out. It's a good video that kind of works hand in hand, so you're not trying to time when to get in and out of the market. But here's what you want to do. So if you're terrified of market crashes in this environment, removing the emotions, and one way to remove the emotions is don't move your money into a position that you can't get it back. So again, this particular lady that I'm speaking about, being in a fixed income, she never had the ability to make it back when the market came back up. So instead of like Nancy, what you could do is you could get a little bit more peace of mind by investing in certain types of investments that would allow you to maybe participate in a percentage of the gains when the market goes back up. There's certain type of investments that can buffer a amount of losses moving forward, so you can kind of put some controls in place to help give you a little bit more peace of mind in case things continue to get worse, but again, not moving to the sidelines to miss out. The next thing I want you to do is I want you to have a predetermined entry point. We have every Monday at our office, we have a team meeting. And, one of the things I was talking to the team about is saying, in light of what's happened in the market, make sure when somebody calls the office, we're getting them together with one of our investment professionals to have a conversation, because now's the time where we've got to walk them through not panicking, but identifying what they own, knowing what they own, and finding out where there's some opportunities in the market as well. And, what I had heard is that our phones aren't really ringing by panicked investors. Most of the calls that we've got here recently are people trying to figure out, okay, Nolan, we've hit in some of these predetermined levels. Where are you seeing some buy opportunities? And what I mean by that is a predetermined entry point into the market will help remove the emotions of investing. So when we look at the sell-offs in the market, we could look at a correction in the market. Correction would be a 10% downturn in the market. You could have a 15% decline in the market. You could also have a 20% decline in the market. A 20% decline in the market is referred to as kind of a bear market. So when we look at this, we can use history to make a better educated decision about steps to make forward. First of all, we don't typically see 15% declines more often than every 2 to 3 years. So I don't know about you, Chris, but who likes sales, right? I know I love sales.
Oh, yeah.
Yeah, I mean, going and getting ready for the summer and, looking at some clothes. We went to Chicago, took a trip out there. We went to the outlet malls, so we didn't go down and spend on the expensive stores, but I wanted to find some of the discounts. There could be an opportunity if you look at it right now, and if you identify some quality companies that are profitable, have high cash positions, companies that have a competitive advantage and or are needed on a daily basis, you could look at this decline right now as an opportunity that you may not see for a couple more years. These corrections or sell-offs, I would say, are considered normal and healthy parts of market cycles. So tariffs, right? That's the big news that's going on right now. Have we had tariffs before? Absolutely, right? Tariffs go back to the 1920s. Even Trump and his previous administration had tariffs, and we saw how the market responded in the past. So use that to make a better decision. Don't think this time it's different, because oftentimes it's not. And they can occur even in broader bull markets. So short term, this could be an opportunity. Secondarily, some of the markets have entered into 20% or more decline. That, by definition, is called a bear market. Historically, these only happen 5 or every 6 years on average. So again, if you're wanting to look at opportunities and you're a long-term investor, dating back to the 1920s, bear markets happen on average only 5 or 6 years. So this could be an opportunity, again, to be able to take a look at where some of the long-term benefits are that are out there. You might feel that you're terrified of the stock market. And again, what I would say is that you don't have to go just to fixed income. There are many investments that will give you the ability to participate into a max, a cap, or a percentage of gains if the market goes up, but still either give you some or all protection against loss of the downturn of the market. And so if you want to know how to navigate this environment, and you want to know, how not to make, I think, a big mistake of, just making an emotional decision, that's where we can help you with developing this plan. Again, what I would call running the fire safety drill. So if you haven't met with an advisor in the past year or two, maybe you have, but you're not satisfied with the advice of just set it and forget it, don't do anything, now is a good time to get a second opinion. And in our independent portfolio analysis, we can walk you through that overall approach. It's almost like having me and having our team as a co-pilot helping you navigate the landscape of what's happening on cruising through retirement.
There are people out there who are listening who might think to themselves, you mentioned being a long-term investor, but I'm getting close to retirement. I'm not a long-term investor anymore. Well, keep in mind that a retirement lasting 10, 20, 30 years, there's money in there you're not going to be touching for 15. So yes, you can still think, and you should still think in some regards like a long-term investor, because that is money you're not going to be touching for a while. So to find the right blend for you in a manner that is comfortable to you, that is where utilizing a team like America's Retirement Headquarters comes in. So schedule a time to speak with them. Have that conversation. It's 419-794-3030. Or you can go to the website, find out more about them, events that they have coming up, things like that. That is at arhq.com.